they suit your fund and what you're trying to achieve. What's the first thing they turn around and ask me? Well, how's the guy being taught? How's that person being taught? And I have to put what I teach in front of them. So the fact that I even get a contract with them, for them it's a zero call situation, in that it doesn't cost them anything to sign a contract, and then a profitable person comes in, so they've got no downside. They have to basically validate what everybody gets taught. The second thing they ask, well, let me see the track record. Let's see all of the trades, how much money they make, what their behavior was like in the last year when this happened in the market, etc., etc. Then after that, they have to see, obviously, like over the 12 months, the good behavior of what you've been doing in those situations. And if you've got the good behavior, you've got the right education, you're making money, you'll be interviewed. We've got several funds who now sit in the back and they interview people all the time. And we've started placing people into funds. So we put 2 guys into funds in November, and a couple of guys are going into funds now as well.
Can we go into a little bit more depth as to the methods that you teach people at the Institute?
Yeah, of course. We can skim over it. It's difficult to do in a few minutes, simply because the public course usually takes a whole weekend. But essentially, it's a macroeconomic, top-down, systematic asset selection process with bottom-up and technicals and risk management thrown in, attached. Because I think you, as a trader, when you're learning, you have to go through processes and checklists to make sure you're not doing anything stupid. And essentially what this is from my experience over 16, 17 years, getting that on paper and all of the basics so you can understand it. And then with the course comes like PDFs and Excel spreadsheets where you're basically doing it yourself and teaching yourself afterwards. So in terms of methods, a lot of risk management that you wouldn't expect would be used, but is actually used by a lot of hedge fund managers. Top-down approach, really starting off with 42,000 assets globally and drilling down through various levels, and then getting to a point where you've got a watch list of 30 to 40 situations, and then you've got a portfolio of 10 to 20 positions. And then it's about, obviously, the risk management is knowing how to manage that portfolio, knowing what to do in bad situations, knowing what to do in good situations, and a lot of stress testing. So making assumptions that, for example, the market, if it goes up 10%, or if a war is announced, what will happen to the oil price? What will happen if the oil price goes up 25%? What will happen to my portfolio? So doing lots of stuff like that.
So you're obviously taking a macro top-down kind of strategy as a basis. What do you think of the kind of bottom-up strategy that might be used by Warren Buffett? Do you think it's outdated now, a little bit?
No, it's not
given
outdated.
Globalization and
it's not outdated. I think it's still important to have, even in a predominantly top-down approach, that you actually tick box and checklist the bottom-up fundamentals of the asset that you're about to expose yourself to. Because if you don't, and there's something significant there that you've missed, it could cost a lot of money.
Sure.
So the intrinsic value situation, working stuff out like that can literally be putting some numbers in a spreadsheet just to make sure that you're not doing anything stupid. You're like shorting a stock that's at intrinsic value. It can sometimes cost you a lot of money. So you've got to check these things.
Some more questions? Yep.
What do you believe are the biggest mistakes made by the 80 to 90% of traders that don't make money?
Believing all the bullshit. in the market. So again, we're back to this conflict of interest. A lot of either bad people or people who are incentivized in the wrong way will either tell you lies or they don't know certain situations occur and they're just doing their job, but they're just a bit stupid. Yeah. Will tell you things that you want to hear all the time. You know, what people want to hear about trading is that everyone can do it, it's easy, and you can make $10,000 a month trading the international Forex markets if you follow this line on a chart. Yeah, complete nonsense. So a lot of these people with conflict of interest will tell you that stuff, but it's obviously a lot more difficult than that. You know, trading can be straightforward, but you've got to take an approach where you've almost got to be very cynical and a little bit angry at the world, because the rest of the world is there to take your money, right? So if you're a bit cynical and a bit angry, it's a good basis to start trading, because you're going to question everything, every method, every system, every objective of individuals. You're going to question everything. That's a very good basis in life anyway, but especially in trading. So I think the reason why most people lose money is because they're probably too trusting. You know, what's the experience of people when they begin trading and they've never done it before? Sit down on their computer at home, type into Google, learn how to trade. What comes up first? Well, on the SEO, on the left-hand side of Google, it's all brokers, and they've all got a conflict of interest. And on the right-hand side, you've got paid search, where people are paying for you to click on that. Why? Because a certain percentage of people who click on that pay them enough money that they can do it again, right? So you've got to be careful. You know, you're not going to learn how to trade by going onto Google, typing in learning how to trade, and going on 20 courses, 20 free seminars. What you're going to learn is a load of rubbish that will never make you money. And then everybody goes and puts money in their trading account and blows up, and they wonder why. And then they sit there for a year, save up some more money, and then do it again. And they never actually seek out a proper education. So that's why, you know, people are taught things like, people are told what they want to hear, but also the assets that people tell you to trade and how they tell you to trade them is actually the reverse of what professional traders do. So someone somewhere within that company, probably the big boss, is making sure that that's what everyone is telling everyone to do.
Let's move on for now. We'll have some more questions at the end. So what do you find yourself doing day to day when you're managing the institute?
Again, getting up around a little bit later than I used to, about 6:30 in the morning. Generally preparing for the market, just making sure the overnight news, what's happening overnight is not going to affect the overall exposure, the overall profit and loss of the community in any negative way. Yeah. When I say that profit and loss, I mean volatility. So volatility of the overall portfolio increasing too much. And we have like bespoke risk systems in the back which monitor and identify where the risk in the portfolio overall lies. So I can find out, you know, if somebody's doing something that is contributing too much or badly to the overall performance of the community. So really, to begin with, it's about the community. That's what I'll spend the first hour doing each day.
And do you think now your work-life balance has reached some sort of equilibrium that you're happy with?
My private life is so much better than it used to be. I've just come back from like 45 days in Asia. Excuse me. I've just come back from 45 days in Asia. You'd never be able to do that if you were working at a corporate investment bank or hedge fund. you probably get 21 days holiday a year, if you're lucky. And the great thing about trading with your own money and managing a community that you can essentially manage remotely, you don't have to be in a physical location to do it. You have the freedom to travel, as you do if you trade your own money. So if you're not actually sitting at a desk working for a corporate where you have to be in your seat for a certain amount of hours per day, even if you've got nothing to do, you have to do FaceTime at the company and sit there till 7 o'clock because that person's going to sit there till 6:45 and you want to get promoted before them. Right? The great thing about what I'm doing now is I don't actually have to deal with any of that nonsense. So much better, much more freedom. I can go out on a Wednesday afternoon and play golf. I can go to Heathrow tomorrow and fly somewhere if I want to and take a few days off. Fantastic. Yeah, much better.
One last question I've got to ask. What's the deal with going to space? Why are you going to space?
Okay. I got a text message like March 2011 from a friend of mine who's like, he's in PR essentially. He's a bit of a sports agent. He used to be a sports agent. And he's Dutch and he moved back to Holland. Hadn't spoken to him for a year or two. He sent me a text message asking me if I want to be the first guy from Liverpool in space. So I thought, that sounds pretty interesting. So I called him and we had a giggle about it. But jokes aside, when I sat down with the company and I realized it was actually a very serious proposition. And the price of actually doing it was low because you're actually sharing the risk of the project. So I went in at literally the first stage of the project where it was almost like a concept where the space company had signed a lease agreement with the aerospace company that's building the shuttle. And looked at the project, looked at the risk, spent about 2 months going through what was essentially not even really a contract. I actually helped them create the contract because I wanted things in the contract. Yeah. That's how early stage it was.